welcome to ML Crypto, your friendly and knowledge-based crypto hub. So today we are going to be discussing about the Kdj Indicator tool. It is an amazing tool that if you know how to use it, you are really going to enjoy your trading. So before we dive into what we have for today, please don't forget to subscribe to the channel, like the video, and your questions are always entertained in the comment section. Well, ETH is doing very well. ETH has smashed a new all-time high of 4,600. Wow! I made a call on this trade in my signal, my free signal group and my VIP group. My members are now pricing cars and houses. So let us dive in to what we have for today. Sorry. Okay, so we said we are discussing about the KDJ. So now my KDJ indicator is on at the moment. You can see it down here. This is my KDJ indicator showing here. So my KDJ indicator is made up of three lines: the K line, the D line, and the J line. The K line is the yellow line, the D line is the pink line, and the J line is the purple line. As you are seeing here, you can see K is the yellow line, D is the pink line, and J is the purple line. So these are the lines associated with the KDJ. Now the J line signifies or represents the convergence or divergence of the D from the K line. Do you understand that? The J line represents the convergence and the divergence of the D line, of this D line from the K line. So the J line shows what happens between the K and the D line. Do you understand? So what we are going to learn today is we are going to know how to use this KDJ to spot an entry, to spot when to leave a trade, to spot when to enter a trade, and to know the direction of a trade. Now, one thing you need to understand is KDJ is a leading indicator. It is a leading indicator in the sense that it shows what is happening at the market at that instance. Do you understand? It is not a lagging indicator. It is what a leading indicator, just as the RSI and the rest. So now, like I said, it shows the convergence and the divergence between the K and the D line, and we can actually use it as a potential entry and exit of a trade, and to know the change of direction of a market. So now let us look at our KDJ. Now if you look at this point here, if you look at this point here, you will see that the J line crossed the D and the K line. Do you understand? And when it crossed the K and the D line, we saw that there was a change in direction of the trend. Do you understand? It is crystal clear if you look at it from this point. Now when the J line crossed the K and the D line, there was a change in direction of the trend. So the trend was a downtrend before, but when the cross happened at this point, there was a change in direction, and we saw that when it crossed below this point, there was also a change in direction. Do you understand? So if you were to buy this market, what will you do is for you to wait for the J line to cross the K and the D line. That is your entry point. It's as simple as that. Now if you want to short the market, you wait for it you wait for the J line to cross the K and the D line downwards, then you short the market. Do you understand? Now, it already gave a change of direction from here, a change of the market trend from this point. Let me use. So there was a change of direction of the market from here already, but we can't determine that as our entry point. We have to wait for it to come to this point, for this cross to happen, for us to know it as our entry point. It's as simple as that. It's more like the golden cross and the dead cross that happens on with the EMA, the exponential moving average. Do you get? So, like I said, it shows the convergence and the divergence of the K and the D line. So, in regards to the convergence and the divergence, now when you see the K line, the J line going close to the K and the D line, you observe that the K and the D line are actually close. They get close, so it showcases the convergence. Now, when you see it, when the cross has happened and the J line is moving far away from the K and the D line, we'll see that the K and the D line are a bit farther than each other. So that is the divergence. Do you understand? The divergence that happens. So, like I said, the J line showcases the convergence and the divergence between the K and the D line. Do you understand? It's as easy as that. So, like I said, when the J line is coming close to the K and the D line, like in this point, that is your entry point. You buy the market. And even though it has crossed the market, you can still buy the market and you still be in profit. You don't, if it just give you a sign that it's going to cross, if you're an aggressive trader, you can actually rush in and jump on the trade. But a conservative trader will wait for the J line to cross before buying. Do you understand? And you can actually confirm this with your RSI. Now, let us look at our RSI. Now, our RSI gave a change of direction from this point, and we saw that the J line crossed the K and the D line at that point. Now, we saw that our RSI was actually telling us that the market was changing direction from this point. We can also see that from our KDJ. And at this point, when this cross happened, you see the market was already in a downtrend. Then before a cross happened here, and there was a change in direction again. So you can use your RSI to confirm your KDJ indicator too, because both are leading indicators that showcases what happened in the market at that instance. Do you understand? It is very, very easy to use. So when you combine this with market structure, understanding the candle that is formed at the moment, and the psychology behind it, you are good to go with your TA analysis, and it's a win-win situation. We can see the various points when the cross happened. You can see what happened. There was a change in direction, and if you had entered at that instance, you'll be in profit. If you had entered here, you'll be in profit. If you had shorted the market here, you'll still be in profit. So it's as sweet as that. If you have shorted the market here, you'll be in profit. If you long the market here, you'll be in profit. You see, it's as sweet as that. So that is one thing you need to know about the KDJ. The KDJ has an overbought and an oversold position. So like if you are seeing the J line right now, it is showing 11 point something. So it means ETH is oversold at the moment. You get? Let me check. At this point, you see, at this point that I just highlighted, at the peak of that J line, you see the J line is the purple line. See the J was overbought, and you saw the resultant effect. It came down. then to this point here, you get 27, still not oversold yet, but here at this point oversold. So like I said, this is what you need to know about the oversold and the overbought position of the KDJ. So like I said, if it's above 80, it is overbought. If it is below 20, it is oversold. So KDJ is sweet. So get to understand this KDJ. You can read more about it, and trust me, you will enjoy your trades. So if you enjoyed the video, don't forget to hit the subscribe button, like the video, and drop your comments. They are always entertained, and I'm always available to reply to your questions. Thank you.